So hey guys, welcome back to the Fibonacci Swings. Myself Abubakar, and today we are likely to analyze the Eurusd on the monthly to 1 hour time frame because we just wanted to create some top down analysis video. And this is third week starting of November, and we are here. The price is 1.05381, and now we are here to reaching about this monthly fair value gap. My bias is clear. I am bearish until we reach this monthly fair value cap, and then we got a something structural change in the 4 hour time frame, and then I will likely to be long until this area of 1.12816. So this is my next plan, which I am talking to. I am most likely to be build and swing trade here. If I get funded cleared until then, I will just like to build a swing trade from this area to this area so that I can target the big targets with a slightly bigger stop loss also. So now we are here in the monthly time frame. We are able to see that we have this fair value cap, which is has been intersecting with this opening candle of this bearish candle of previous month of August 2022. If we measure it from below to above this area, we are see that fair value gap is in the discounted area. So it's the discount area. Now it can go up to higher. Okay, so this is our drawn liquidity on the monthly time frame. Let's move on to the weekly time frame. On the weekly time frame, we are able to see that price has created a big that candle. The reason is very obvious because price want to go lower to this monthly drawn liquidity, which is this fair value gap, and this is a trend line which was broken on Monday 21 October. Now price is just going below and below and below, so there is no very chance to actually long the market because the reason is quite obvious. Price has been going down, so why you are going to be long the price? That's obvious, very simple. In the monthly time frame, weekly time frame, we're able to see that two death candles has been closed. It's like two triple bathed candles with an average starting how many pips the one candle is. One candle is about 253 pips, and now how many pips we need more to go on to this monthly? So we need almost more 250 pips. So most likely this week can be also the bearish because there is no major news here. If we see the economics calendar, we are able to see that we have only Euro news on the Friday, which can most likely to be push the price more lower. And in the USD, so in the USD, we have unemployment claims on the Thursday. So most likely is price will just go from sideways on the Mondays, Tuesday, and Wednesday, and it will just go with the one direction also, and more likely to a little moves. And on the Thursday, price will most likely to create a bigger move, and which can go to the drawn liquidity, which is our monthly fair value gap, and then after the next week, maybe it can go higher. So price is all about the speculations. We're speculating the market to earn some money. Okay, that's so much simple. So on the weekly time frame, we're able to see that price has created this trend line and which has been broken now, which was this candle on the 21 October, and then there was a retest candle which closes likely in the below the trend line, and then this candle was the fair value cap grab and it grabbed the fair value cap and then it's go down, and this candle same it just opened here high and low and it closed here. So now we are able to see price has been so much bearish. So now we have of course the down liquidity, which is this monthly fair value cap. Okay, so now our weekly bias is also clear that we are bearish. On the daily time frame, we are able to see that uh, price come up. This was the candles which has been just formed. This was a fair value gap which has been reacted. Price just closed below the opening price of that bearish candle. Of Thursday candle, price closed below this, and it also closed in a discount. That means most likely we're in the bearish. And candle color does not matter, but the wick matter because it is a huge wick which created an impact where so I shorted about an area of like this. My TP was around to close about there, but the problem was I think the price will not go to there, and the same thing happens, and price did not go there. So I booked at this candle low. So this was a have a good day, I can say that. So in the daily time frame, we're able to see that price reacted to this bearish fair value gap, And in the 4 hour time frame, we're able to see that after that reaction, which was a news action, because the news pumped this Euro USD hard until the 1.05931, and then prices just more likely to come down and down. So this was because a low volume on the Fridays, because Mondays and Fridays are too much shitty to trade. I most usually not trade. To be honest, I trade Mondays and Fridays, but it's more likely to be gamble. That's okay. That's not a obvious reason that you need to trade. So in this scenario, we're able to see that price has actually closed below the fair value cap of this 4 hour candle. Price has closed below that, which means we are most likely to go more bearish. So what are the important zones where we can short this Euro USD? So above we have this liquidity almost cleared. Now we have this price lag. Price lag is very simple. Uh, this is low and this is a new high. So high and low. So most likely we want to short above this area. It is 1.05628. So let's find some sort of good entries if we can find here. On the 1 hour time frame, we're able to see that price was most likely, and price did not close to this area, and there isn't any fair value gap. So we got a fair value gap here, which is too much small. Most likely it can be the bigger in the smaller time frames. So let's see how big it is. So let's mark it out here. So it is in the premium area. So we just wanted to short from that area and bring the price lower. So this our internal and external and liquidity is here. We want to target these, and if you want to hold that trade, you can hold, but it's still so much risky. Then we have this ERL of the retest leg, because there was a range in the weekly time frame. So this is the range low, and then we have our original drawn liquidity, which can be hit almost the next week, probably next week or maybe the after that week, maybe the last week of November. So this is how the price is going on, and most likely I would like to short the market because price has been too sensitive at this moment. There is no movement to long this price. So in the 30 minutes time frame, we can see a huge fair value gap coming up here with this liquidity area. So most likely price will come on the Mondays, Tuesdays to this area, and a good short can be formed. But remember that don't just enter randomly. Wait to structure for the build. So this can be the area for shorts. So here you need to do one thing. Price come up to this area, got a rejection. Price come here and leave that fair value cap. Enter on that fair value cap. Stop losses above this area and then target these liquidities. Your TP first be here, TP second here, close the position here, and then find the entries about in this leg. You can find a fair value gap here, order block here, baker block here, mitigation blocks here, and then enter there and short to this area, and you can short about to this area, but it's too risky to short from this area to that monthly down liquidity. So I would just likely to recommend you plan the trade and trade the plan. This is all about my buys. The major news events are on the Thursday and Friday, which is most likely to happen, and it can, I think it will just do one thing. Market will just do sideways markets on the Mondays and Tuesdays. Market likely to react like this, and a pump can come up to here and then below. Enter on a fair value gap here, target belows. Enter on the fair value gap here, target belows to the monthly. And then this liquidity has been created, and which will be then fulfilled by the monthly, because the monthly inefficiency will do one thing, it will just push the price higher because the many hedge fund orders has been here. So most likely price will come up to the here. This is my only monthly weekly wrap up for the Euro USD. It's my first time analyzing one to one, like the 10 minutes video only analysis of the one pair. Also, it's too much heavy for me, and because my English is too weak, so don't take it wise. But also, my bias is clear. I was just likely to short the market until price has reached to the monthly down liquidity, which is a fair value gap. So, hope so. Do enjoy your weekend. Trade the plan the trade. I will see you on the next week or on the next video of BD wrap up. So, see you. Bye bye.